Speaking of energy, stocks like Energy, Vistra, and Constellation Energy, some of the biggest laggards on the S&P this month. Our Brian Sullivan joins us from Houston, where many of the street's top energy leaders are gathering to discuss the outlook. Brian.
Yeah, including one of the stocks on that list, Mike. And we are here now with Joe Dominguez. He is the CEO of Constellation Energy. CEG is the ticker. Joe, thank you very much for joining us. Critical time.
Thanks for having me on, Brian.
A lot of your investors are watching right now. So the stock's been, I'm not going to surprise you with anything. Obviously going down. What's your message to investors right now?
It's been up and down all year.
Well, soaring, and then
we were up 50% earlier in the year. Now we're down. We're down 12% coming into the day. Look. The way we get valued by the street is so much driven by the sentiment around AI right now. But the practical reality is we're seeing load growth, not just AI-driven load growth, but load growth, and we are executing. And we're having a terrific year so far, and I think the results will
load growth is the industry term for the amount of power, more demand for power that is needed. All right, quickly, we'll get to that in a second. Tariffs, obviously it's a hot topic here. Do tariffs, if implemented, we're not really sure what's going to happen yet.
Right.
If implemented, would tariffs have any impact on your results, your numbers, or your residential customers' electric bills?
Well, a bunch of stuff there. Look, direct impacts, not so much, and the reason is we have an existing fleet. And while we're constantly upgrading it, we're not a huge consumer of materials at this point in time. That's one of the benefits of our position. In terms of load growth, right, there are a lot of different projections about how tariffs impact the economy. One way that would be positive is that they drive an onshoring of business, so some of this demand growth that we've been talking about would actually increase. In terms of the residential customer, they're going to be impacted by all sorts of things. So tariffs on energy might drive up natural gas prices, as an example. That would impact negatively residential rates for both electricity and gas, of course.
You're talking about this idea that, the Premier of Ontario, Doug Ford, who we've had on our show and I respect very much. I mean, obviously he's angry. He's like, we're going to cut off your power to Buffalo and Detroit and northern Minnesota. The idea being like those places are like, oh, we need to build a power plant because of this. Yeah, but that takes how long to build a power plant today?
Oh, easily 3 to 5 years. And
minimum,
that's if you're ready to rock and roll, right? If you're not ready, you're talking about a longer term thing. But I know the hyperbole out there about we're going to cut off your energy. I think that's a bunch of hooey. That's not going to happen. What I'm talking about is charges on energy byproducts like natural gas that do get imported from Canada into the U.S.
And this this need to expand your capacity. That is one reason, or maybe the reason, I would imagine, that you are buying Calpine. They're a $26+ billion deal. Calpine's what's called a merchant generator, meaning they make power and they sell it to whoever needs it. It doesn't go automatically to a specific place. How do you ease concerns that your balance sheet will be so leveraged with Calpine costs? How investors are worried about what that looks like on your balance sheet.
Calpine's going to throw off a lot of cash. It's effectively going to pay for itself within a handful of years, right? So we're going to be in a position where we get back to our balance sheet position pre-deal within just a couple of years after we get the regulatory approvals and go. So that's not going to be a concern for us. We're going to be an investment grade book before and after this deal. The rating agencies didn't touch our credit ratings.
Yeah, and that's so. What is it? $12 billion in cash and stock, or $12 billion in debt, and the rest in cash and stock. Your leverage ratio is going to soar on that deal when that deal closes. You're telling investors we're going to be okay even with that higher leverage ratio.
Yeah, we have the cash in hand to start bringing down that leverage immediately, and over the course of 2 years, it'll be what it is at Constellation today. So look, the benefit we've always had is having this investment-grade balance sheet. It allows us to outcompete folks in terms of long-term deals and the prices we could offer to consumers. We will continue to have that benefit going forward.
Yeah, and very quickly, natural gas, nearly $5. That's a high input cost for you with a very heavy natural gas fleet. What does that mean for you and for residential customers?
It's effectively a pass-through cost, because what happens when natural gas prices go higher, electricity prices track higher, because natural gas sets the price of electricity in America over 90% of the time.
Joe Dominguez, CEO of Constellation Energy. Stocks getting hit probably with a lot of high multiple stocks, by the way, like a Palantir, that have nothing to do with tariffs. Maybe the market just wants to sell off. I'll leave that to people smarter than me like Michael Santoli. Joe Dominguez of Constellation, thank you very much for joining us.
Thanks, Brian. We'll be back.
Back to the aforementioned Michael Santoli. Mike.
All right, Brian, I will take it in the spirit with which that was offered. We'll